Hey everyone, welcome back to Corporate Decoder, the place where we untangle the confusing world of corporate finance, like a seasoned detective chasing a lead that promises a treasure trove of juicy details. Today we're diving deep into the latest filing from ECD Automotive Design Incorporated, and let me tell you this one has more twists and turns than a classic car rally. Stick around because we're about to decode their financial story and what it really means for their future. ECD Automotive Design Incorporated has filed an amendment number 4 to their Form S-1 registration statement. This is essentially an update on their ongoing efforts to register more shares for sale. It means they are actively trying to raise more capital or allow existing shareholders to sell their stock. This company is a custom car builder specializing in what they call the Restomod sector, focusing on classic luxury vehicles like Land Rovers and Jaguar E-types. They aim to give these iconic cars modern performance and a unique personalized touch. It is a niche market with high-end customers. This is where things get interesting. They are registering a massive amount of common stock for resale by existing shareholders, and some of it will be sold directly by the company through certain agreements. They are talking about hundreds of millions of shares here, which can really impact the stock price. Their stock trades under the ticker ECD and their warrants under ECDOR. This is important because it tells us they are a publicly traded company and subject to all the scrutiny that comes with it. They highlight awards like Top 5 Restorations by the Robb Report and emphasize their mission to create one of a kind luxury vehicles. Their headquarters in Kissimmee, Florida is called the Rover Dome, and they employ a good number of skilled craftsmen and technicians. They are clear about their product line, focusing on specific models like Range Rover Classics Land Rover Series Defenders, and now also Jaguar E-types, Ford Mustangs, and Toyota FJ40s. A typical build takes about 12 to 14 months. Let's look at the hard numbers. In 2024, they brought in $25.1 million in revenue. That is an increase from $19.5 million in 2023. That sounds good on the surface, but we need to see what is happening underneath. Now, this is a big one. While revenue went up, their net loss also dramatically increased from $1.2 million in 2023 to a whopping $10.8 million in 2024. This means they spent way more than they earned, and that is always a red flag. They provide this financial metric, which is a way to measure operational performance before certain non-cash or non-recurring expenses for the 3 months ended the 30th of June 2025. They had an adjusted EBITDA of negative $1.5 million. For the same period in 2024, it was actually positive $27,408. This shows a significant deterioration in their operational profitability. Looking at a more recent period, the 3 months ending the 30th of June 2025 saw revenue increase by about $561,000. That is a positive sign that their sales are growing. But their gross profit, meaning the money left after accounting for the direct costs of building the cars, actually dropped by over $666,000 in that same period. This means their costs to make the cars are going up faster than their revenue, and that is not a good trend. Their operating expenses also jumped by over $1.4 million. A big part of that is attributed to general and administrative costs, which sounds like overhead and general running of the business increasing significantly. They have a substantial facility and a decent workforce. This is a strength, but it also means higher fixed costs. Here is a major risk factor. They are under an SEC investigation related to the restatement of their financial statements and auditor changes. This is serious stuff. It can lead to hefty fines and distract management from running the business. This is perhaps the most alarming disclosure. Their auditor has serious concerns about the company's ability to stay in business. This is because they have significant losses, negative cash flow, and will likely need more money to keep operating. This is a major red flag for investors. They are registering a huge number of shares for resale, and that can flood the market. This means existing shareholders might see the value of their investment decrease, especially if the company continues to struggle financially. This is a classic warning from companies with volatile stock prices. They are basically saying be prepared for big price swings and a real chance of losing money. They do not plan to pay dividends anytime soon. This means any return for shareholders will solely come from stock price appreciation, which as we've seen is quite volatile. This document, along with its amendments and the audited financial statements, provide a detailed look into the company's financial health. Looking at their balance sheet shows a significant working capital deficit of about $6.8 million as of the 30th of June 2025. This means their short-term liabilities are much higher than their short-term term assets a classic sign of liquidity problems. Total liabilities are over $37 million, while total assets are just over $14 million, which is not a good look at all. In the most recent quarter ending the 30th of June 2025, they reported a net loss of over $4.2 million. This continues a trend of significant losses. The auditor's report is pretty direct. They express substantial doubt about the company's ability to continue as a going concern. This means they are not sure the company will be around in the next year or so. Their balance sheet at the end of 2024 shows total liabilities of over $37 million against total assets of about $18 million. That is a negative net worth and a huge red flag. Their statement of operations for the year ended the 31st of December 2024 shows a net loss of over $10.7 million. Revenue increased, but the costs associated with that revenue increased even more dramatically. This note reinforces the auditor's concerns. They have a working capital deficit, significant losses, and are relying on loans to stay afloat. They explicitly state that management has determined there is substantial doubt about the company's ability to continue as a going concern within 1 year. Total convertible notes payable are over $18 million as of the 30th of June 2025. This is a significant amount of debt that needs to be managed. This section details their business combination and name change. It shows how their equity structure has changed, which is important for understanding ownership. They have an equity purchase facility agreement allowing them to sell up to $500 million of their common stock. This is a way to raise capital, but it can also lead to significant dilution for existing shareholders if they sell shares at a discount to the market price. At the time of this filing, their stock price was around $3.93. Given the number of shares they are registering for resale and their financial struggles, it is understandable why they are concerned about market price declines. So what is the verdict on ECD Automotive Design Incorporated? This company is in a challenging position. They have a unique product and a passionate customer base, but their financials are deeply concerning. The massive increase in net losses, the auditor, a substantial doubt about their going concern status, and the sheer volume of shares being registered for resale paint a picture of a company fighting for survival. While their efforts to pivot to electric vehicles and expand their retail presence are strategic moves, the immediate financial pressures are undeniable. They are heavily reliant on future financing, whether through debt or equity sales, and the dilution from those sales could further impact existing investor value. Our opinion is that this is a highly speculative investment, and investors should proceed with extreme caution. There is a lot of passion and craft in their cars, but right now the numbers are telling a much less glamorous story. Make sure you are subscribed for more deep dives like this and join our Discord community linked in the description below to keep the conversation going. What is your take on ECD Automotive Design Incorporated? Are they a diamond in the rough or a classic car heading for the scrap heap? Let us know your thoughts in the comments, and if you found this valuable, a quick like really helps us out. Thanks for watching, and I'll see you on the next episode of Corporate Decoder.